welcome to the deep dive. Today we're focusing on a really unique market.
A paradox, really.
It is. It's a market that's defined by just this overwhelming customer demand, but at the same time, it's hindered by an operational structure that makes success, well, nearly impossible.
For almost everyone, yeah.
We're taking a close look at Argentina's iGaming landscape.
Yeah.
It has undeniable potential, but it is just layered with complexity, regulatory, economic, that demands a very specific kind of patience and capital.
That's the perfect framing for it. And from our perspective, our job is to peel back those layers and give a clear view of what's really happening on the ground.
Right. Your work at Gambling Databases.
Exactly. We are the Gambling Databases research team. And really, we're a group that's just dedicated to delivering these in-depth analyses of this, the global iGaming landscape.
So you look at everything.
Everything. So in each country report, we explore key aspects like local regulations, taxation, the player experience.
Operator conditions, all of that.
Operator conditions and emerging trends. Yep. Our goal is to provide a clear, data-driven understanding of how the industry functions within each market and, what makes it unique.
And what's so unique about Argentina is just its sheer scale. If you look at Latin America, this country is the leader.
Oh, absolutely. The undisputed leader.
It's the largest gambling economy. The total market is somewhere between, $2.5 and $3.8 billion annually?
That's right.
And the online part of that is just massive and growing fast. It's projected to go over $1.5 billion by 2025.
And that's driven by a huge player base. We're talking about 8 million active online players.
Which is about 25% of the adult population.
Yeah.
The passion is there. The demand is there.
It is an opportunity-rich market, no question. But that's where we hit the paradox. This enormous potential is it's throttled
by two main things.
Two primary issues. First, a completely decentralized regulatory framework, which I'm sure we'll get into.
Oh, yeah.
And second, these crippling economic hurdles. We're talking taxation and, chronic inflation.
And the result of all that friction is the key number, right?
It is. The critical takeaway is that less than 10% of the market volume flows through licensed operators.
Less than 10%. So over 90% is still in the offshore market.
That's right, over 90%.
9 out of every $10. That's a staggering figure. It tells you the license system is, it's fundamentally broken.
Or at least extremely challenging.
So let's start there with that first big hurdle, regulation. If you're an operator, the first thing you realize is there's no single front door.
That is the core operational nightmare. Argentina isn't like a federal system where one national license gets you in.
Right.
It's structured as 24 autonomous provinces, plus the autonomous city of Buenos Aires. And each one has independent, sovereign control over gambling in its territory.
So for national coverage, you're looking at 24 different sets of rules.
Potentially, yes. 24 different licensing requirements, different tax structures, different compliance obligations. It's a maze.
So we're not just talking about high costs. We're talking about multiplying your entire compliance department.
Exactly. Your legal team, your accounting, your tech teams, you have to manage all those different obligations.
Is there any kind of, mutual recognition between provinces?
Almost none. And that's what makes the fragmentation so crippling. Think about it from a player perspective.
Okay.
If a player moves from Buenos Aires province to Santa Fe, the operator might need to run 2 separate KYC compliance flows.
Wow.
Your anti-money laundering policies, your IT security audits, they all have to be tailored 24 different ways. It's why most operators just focus on the biggest provinces first.
And I imagine those are the most expensive licenses.
Of course.
We're seeing costs from, $100,000 up to $600,000 US dollars for 10 to 15-year terms.
Yep, and you have to target the key areas. Buenos Aires province is the big one. It has over 25 licensed operators already. It's the most competitive, but also the highest value.
And what if you just ignore all that and operate without a license?
Well, the risk is immense. It's not just a fine. Unlicensed operations are criminalized under the National Criminal Code, Article 301Bs specifically.
And the penalties.
Severe. We're talking 3 to 6 years in prison, seizure of assets, and active ISP blocking of offshore sites.
Which raises the big question. If the risk is prison time, why are 90% of players and operators still taking that risk? Is the enforcement that weak?
That's the tension, right? The law is severe, but actually enforcing it against an offshore company is incredibly difficult for a single province.
Well, the risk falls on the local guys.
Generally, yes. Local payment facilitators, intermediaries, the main offshore operator is often untouchable, so they compete without any of these costs we're talking about.
Okay, so the regulatory structure is the headache. Let's pivot to the customer, because here, at least, the story is much better.
Oh, much better. Argentina's digital foundations are a massive strength.
I mean, you're looking at over 90% internet penetration.
Mm.
And smartphone adoption is almost universal, something like 97% of the population.
And that digital comfort is reflected directly in how people gamble. The key stat here is that 70% of all gambling transactions happen on mobile.
70%.
The demographic is also perfect for digital services. The median age is just under 33. It's a young, digitally native player base.
And what are they betting on with those phones?
Sports. Sports betting is absolutely dominant. It accounts for nearly half of all gamblers.
And by sports, we mostly mean one thing.
We mean football. Soccer. It's not just a sport, it's a national obsession.
Right.
The local leagues, the Copa Libertadores, European leagues, all that drives 80 to 85% of the total sports betting volume. If you don't get that, you don't get this market.
And to make all that work, you need smooth payments. You can't have a mobile-first market without easy ways to move money.
100%. And there's one payment method that is absolutely critical.
Mercado Pago.
Mercado Pago. It's the dominant digital wallet. It has something like 40 to 45% of the market share for online transactions. If you don't integrate it, you're dead in the water.
And after that?
Debit cards are the next biggest piece of the pie, around 30 to 35%. But failing to integrate Mercado Pago first is a guaranteed way to lose customers.
So, okay, we have this perfect storm, right?
Yeah.
Massive demand, a sports-obsessed population, incredible digital infrastructure.
Huh?
But the regulated market is capturing less than 10% of it. That just doesn't add up. The friction point has to be financial.
It is. It absolutely is. The licensed operator faces just a crushing, multi-layered tax structure.
Let's break that down.
It makes the whole model non-viable when you're up against a zero-tax offshore competitor.
So what are the layers?
Okay, there are three main ones. First is the provincial GGR tax. This varies, but it's typically 10 to 12% of gross gaming revenue.
And GGR, for anyone listening, is the money the operator keeps after paying out winnings. It's their gross profit, basically.
Exactly. That part is standard. But the second layer is where the model just breaks.
The federal deposit tax?
The federal deposit tax. It ranges from 2.5% to 15% of player deposits.
On deposits, not revenue.
On every single deposit. A foreign operator, for example, pays 10% on every deposit a player makes.
Can you explain why that's so much worse than a tax on GGR?
It completely inverts the economics. A GGR tax hits your profit. A deposit tax hits the customer's turnover, whether they win or lose.
So you're taxing the churn.
Precisely. A player deposits, bets, wins a bit, withdraws, then redeposits. You're getting taxed again and again on the same pool of money. It destroys your margin, especially on high-volume, low-margin bets.
Wow. Okay. So you're just penalized for having active players. And the third layer?
The third is your standard corporate income tax, progressively applied at 25 to 35% on your net profits.
So when you add all that up,
you get a combined effective tax rate that reaches an astonishing 37 to 62% of revenue.
37 to 62%. In most markets, a GGR tax is, what, 15, maybe 20% at the high end?
Exactly.
How can anyone possibly compete with an offshore book that pays zero and can offer better odds and bigger bonuses?
They can't. That's the point. It leaves the licensed operators with razor-thin margins. The 90% offshore figure is the clearest proof that the economics are fundamentally broken. The system basically pushes players offshore.
And as if that's not enough, there's the elephant in the room for any business in Argentina: currency volatility.
The macroeconomic instability.
Yeah, we're talking about a country that has seen 50 to 200% annual inflation. Financial planning becomes a nightmare, and your peso revenue just evaporates in real terms.
And just when you think it can't get any harder, the regulatory climate is about to get even tighter.
You're talking about the new federal legislation.
That's right. It passed the Chamber of Deputies back in November 2024. It's now waiting for the Senate. If it's enacted, it introduces two huge new friction points.
Okay, let's start with the first one: identification.
Mandatory biometric ID. We're talking facial recognition verification for all accounts linked through Renaper.
And Renaper is the national digital ID system.
It is. So while it's great for security and player protection, it's a massive barrier to entry for new customers.
Right. People are used to quick signups. Now they'd have to do facial recognition with a government database.
It just creates huge onboarding friction. You risk a massive drop-off, especially when the offshore alternative is easy and anonymous.
And the second point, a comprehensive advertising ban. That feels devastating for a market built on sports.
It is. The legislation would prohibit all gambling promotion. It would eliminate sports sponsorship.
Which is the main engine for acquiring customers.
The main engine, yes. And it would put strict limits on welcome bonuses and other promotions.
We estimate that even before this ban, the customer acquisition cost is already high, like $150 to $300 per player.
And if you take away sports sponsorships, which are critical for capturing that 85% football volume, those costs are just going to skyrocket.
The path to profitability just gets longer and longer.
And that brings us to our final verdict. Our reality check on this market is that it's challenging to prohibitive for most operators.
The time to see a return on investment must be years out.
We project 3 to 5 years to get to a positive ROI, if you get there at all. The initial capital, the compliance costs, the taxes, it's a huge burden.
So who is this market even for? Who can actually succeed here?
Only the major international operators. You need at least $10 million in capital you can deploy, a 5-year investment horizon, and really sophisticated currency hedging.
So you need the ability to just absorb losses for years.
For years.
Okay.
While you build scale and hope to outlast everyone else, for smaller operators or anyone looking for a quick ROI, they should definitely be looking elsewhere in Latin America.
It's just such a market of contradictions. You have one of the best digital foundations and most passionate player bases in the world.
And yet,
the combination of punitive taxes and this extreme provincial segmentation creates an environment that only the biggest, most patient global players could possibly survive.
Which leaves a really important final thought for you, the listener. Will this proposed federal legislation, which is, designed to protect players with things like the ad ban and biometric ID,
Right. Good tensions.
will it inadvertently strengthen the 90+% offshore market by making the licensed operations even less competitive and even less financially viable? That's the huge uncertainty facing the market today.
For the full text of this and other country reports, visit our website at gamblingdatabases.com.